your host, a jubilant Chris Vecchio. He's your co-host, and ever so bearish Ilya Spivak. We're about to go through the market open, Ilya. Hey, how do you think my weekend went?
I'm going to say it went well, and that had nothing to do with the Strait of Hormuz.
Oh, right. We have stock markets that are opening up a little bit. Yeah. Futures are up a little bit. We do have a potential ceasefire agreement for the 17th time agreed upon here. I guess got a New York Times alert. I did see something from Pakistan authorities. So we do have a little bit of a bounce here in the markets ahead of the weekend open, Ilya. But, who cares?
Yeah.
Who cares?
I mean, listen, I'll believe it when I see it. And clearly there are onshore conversations to be had that are much more positive.
There are many things to talk about in this market today. Gosh, this is the first time I've seen a team of mine win a championship in my life. It was just as magical as I thought it would be all these years. Truly delightful.
As we were saying in the green room, I moved to San Francisco in '93 and inherited a very terrible Warriors franchise. So when that finally turned around for the first time since 1975 in 2015, we had a moment.
I made the mistake of Frank sent me a video from one of the riots after one of the recent games, and I was just like, "Oh, those are my people," like tongue in cheek. And he's like, "What do you mean, your people?" So I've been getting a nice, stream of videos over the weekend of what's been going wrong. But my goodness, something going right here. Okay, so we have this market open coming up in a few minutes' time, Ilya. The biggest thing at the end of last week was the volatility compression across the board. You can see it in the column here. Matt, let's just go to the slides here. We're going to have the Knicks on screen the entire time, so people can just get used to it.
By the way, you'll notice my Spindrift can here is appointed in your honor.
I did say a few weeks ago on air that people didn't understand the economic warfare that New York was about to wage on the rest of the country with our playoff run, because it's too expensive to go to the Garden, so people just fly everywhere else. And San Antonio last night, like 60% of the tickets were Knicks fans. Oh, so good. Ilya, over the past week, volatility has been crushed. That little kink in the vol curve that we saw at the start of last week, which was the predicate for me at least getting short the NASDAQ put spread, the M&Q put spread there, we saw that actually further resolve itself. The volatility curve, as we look to it from SIBO, for example, front month to back month, July 17th expiry all the way out through April 27, you're looking at nearly 6 full points once more. Again, the VIX at the end of last week closes down below 18, 17.68 because of this expected ceasefire. And it looked like over the weekend that maybe that would work out. Certainly Israel bombing Lebanon again didn't seem to help. Trump released another statement detailing an angry phone call he had with Bibi this afternoon.
I mean, apparently he told Axios some actual word choices in that call. And apparently addressing down was had.
Apparently so, but apparently we now have a deal in place. So it does look like volatility is going to start the week on a little bit of a softer foot here. 1966 was the close that we had on Friday in the VXN contract, the July expiry. It looks like we could going a little bit lower here at the onset. But that does bring us to weekend Wall Street. Weekend Wall Street was up by about 0.6%. I saw weekend oil down by about 4% earlier. We're going to have a lot to digest, though, in the coming days, because this is a week where we finally moved through the full mill of the earnings reports. There are still earnings reports to be released, but who cares about them?
Lazy boy?
Accenture is the most notable one, and no one's looking to Accenture, the consulting services firm, for being a weather vane in this broader market. Although maybe they have massive layoffs because of all the consultants they no longer need to hire thanks to AI. Perhaps it's a different kind of weather vane, but I don't think anyone's banking on much of anything from Accenture itself. Otherwise, Ilya, we go into this market open here, and we closed on Friday at 74.97. It looks like those early prints coming through here just a few seconds before the open are going to give us an open closer to 75.43, 75.43, and that's where we started. So 75.50 as we ping pong around here. Let's just get into the next week ahead, though. That's a little early. That's actually a little early. What do you take of these red lines here, these red numbers in the 5-day vol change as we look back over the past week? There is a notable vol crush across basically all asset classes as we enter now this next week of June.
Yeah, I mean, I think we had a spook, and now the markets are trying to find out whether they can get to the other side of that and say, okay, well, if this is resolved, then everything is fine. And we can get back to our regularly scheduled programming. I think what is in my mind as all of this occurs is, yeah, okay, maybe the spook resolves, but that's not why the markets were down. So if that's not the reason, then the resolution should not be a reason for a rally. And I think when you have a week like this one, where everything is loaded to the gills with central bank risk, I mean, we've got the BOJ, we've got the Bank of England, we've got the RBA, and of course, the Fed. And last week, we had an ECB that unexpectedly hiked rates. So we have a week loaded with exactly the kind of concern that has been bedeviling the markets this entire time, which is the cost of money is too high for the amount of risk out there. And at some point, people go, you know what? I don't want to have money at risk in this environment. Because if I get one of these things wrong, they're so unpredictable and so wild that it's going to be too expensive to borrow back and go again. Let me just back up here.
Well, that is not the market open. Market open is 75.55 here at ES, 0.8% higher. The Nasdaq's up 1.2%, back to 30,313, and in doing so, clears out that high that we had on June 9th that marked that big sell-off here just when we look back last Tuesday, Ilya. So we're starting to get some poking through some key levels here. The Russell's breaking out to a new all-time high here, 3,011 right now in the chart. I think daily perhaps serves this a little bit better, more justice. Perhaps that was a flag forming. We're now in the U6, but if we go over to the M6 contract, for example, that to me looks like a clean breakout and bounce once more off of your 50-day moving average.
And that could be. I mean, this wouldn't be the first gap open that fizzles into a sell-off. In fact,
don't be so pessimistic. The Knicks just won.
Good for them. That does not.
Has the S&P 500 been up every day after a Knicks win during the finals? Why would you bet against that tomorrow?
I don't find that to be a statistically significant sample. When you look at this, I think, again, of course, you have, in thin liquidity, a reaction to the headline. And if you thought that resolving this was going to fix anything, then you might be optimistic episodically. Sure. It's just not the case.
Okay, so
this President is not what the market is concerned about. So yes, you could get a day or two of upside here, especially going into the Fed. I don't think that's at all unlikely as such. I just don't think that we're looking at a rally. I think we're looking at a correction that's going to fail.
You know, I want to put Trump's comments in context of that Fed meeting. You know, it's not lost on me that the few days before we get a new summary of economic projections, President Trump's working overtime to make sure the strait's open. Because if the Fed issues projections on Wednesday with a straight open, they could somewhat credibly make the transitory inflation argument a little bit with a straighter face than if the straight was still closed. Yeah. And so just imagine right now, Donald Trump says here, President and fellow Knicks fan Donald Trump notes, the deal with the Islamic Republic of Iran is now complete. Congratulations to all. Emphasis editorially on me here. I hereby fully authorize the toll-free opening of the Strait of Hormuz and simultaneously herewith authorize the immediate removal of the United States naval blockade. Ships of the world, start your engines. Let the oil flow.
Sure.
So, Ilya, I mean, going into Wednesday's...
You can say that. Won't change the fact that the oil is not going to flow for months.
That's... Markets and reality are often disconnected. Main Street and Wall Street are two different things.
No, the markets are going to like that. There's no question. Having a signed MOU is better than not having one. That's just... Sure.
Going into Wednesday... Could the table potentially be set for the Fed to say, we still have no intention of hiking rates this year as things currently stand? And could that be a relief valve for markets which in just recent days had priced in September possibly as when we could first see hikes arrive?
I think the issue for markets is less so whether we're going to get a hike and more so the inevitability of having to deal with this inflation. And the longer you put it away, the more hikes you're going to get. But let's remember what we just saw at the last Fed meeting. We saw more dissents. I mean, of course, we had the obligatory Stephen Mirren dissent, but he's no longer on the board. It doesn't matter. He can dissent all he wants. And of course, now that he's off the board, his tune has changed somewhat. Shock of shocks. But when
just like Tom Tillis, just like these other senators,
shocking. Wait,
just like John Thune.
What happened? So
what changed?
What happened? But Stephen Mirren aside, you had more dissents on the FOMC saying, no, we dissent retaining this dovish bias in the statement. Mm-hmm. You got to take that out. We need to tell people there is an equal possibility that we could go this way or that. People need to know. And when you look at the inflation numbers, you see why. The spillover is there. The inflation's there. It's not going away. You could open the Strait of Hormuz yesterday. It's not going to make the slightest bit of difference at this point.
Well, yeah, we're beginning to see some key technical levels broken here. Feeling a little vindicated for holding those longs through last week's drawdown. And I think my approach going into what we're seeing tomorrow's market is going to be steady as she goes. We're breaking the series of lower highs and lower lows, pivoting through that June 9th high. Maybe. ESU6 up to 75.61. Hey, listen, it's a long 4-hour candle here, but we're talking about the game plan for tomorrow. NASDAQ here, getting into the territory of, again, breaking out and holding above that key level, which, not for nothing, Ilya, this was a pretty important level here that the NASDAQ was trading around, right around 30K psychologically here in recent sessions. Back in May, here is support in late May going into early June, and then knock resistance, and then finally back through it. So 30,000 to me overnight is going to be a key psychological level in the NQU6 contract. We're seeing vol come in as we look at this market open as well. So a sustained move through a key technical level coupled with that vol compression at the start is pretty favorable for a little bit of a Monday bounce, assuming the levels hold. But that's a meaningful gap lower in vol futures as well. VXN U6 here is now at a cycle low at 1918, as it were. And so that's why I think really I'm thinking deeply about this, Fed meeting on Wednesday here. Fed cut odds, they're back to where they were prior to that non-farm payrolls report we had. That was obviously much better than expected. Granted, I think it was better than expected for nonsensical reasons. Most of it was part-time leisure and hospitality, which what's happening in the economy right now? The World Cup, where we need a lot of part-time workers. So we got everything, bunched in a knot over that. Either way, though, right? If we go into a Fed meeting on Wednesday where the Fed can say with a little bit of a straighter face under a new wash that we're still sensitive to both sides of the mandate, but we don't think that we may need a hike rate yet, particularly if the Strait of Hormuz is reopening, the market could see a further retrenchment in these cut odds. And that could be fuel then, that reduction in fears around the cost of money. It gives you another shot at making another leg up here before we get to reality and start looking at tank bottoms and tank lows, which are expected to hit across Europe and North America and parts of Asia in the next 2 weeks, which is really the undercurrent of Trump pressing to get the Strait of Hormuz open at this juncture.
Yeah, I think when you look at what's going on here, it becomes this conversation that we were talking about at the start of the show. Are you optimistic because a deal was done, or are you optimistic because the landscape for interest rates has materially changed? And I think there is certainly room for episodic optimism. If a deal really is done, this would be the 39th attempt to announce it. I believe that's the count. That's the going count. If finally we're here and that was just sort of a part of the negotiation, okay, fine. That's understandable. And then a deal is done, and the market is happy that a deal is done because, as we said back in early April, is a ceasefire going to hold? Does a ceasefire generally get violated a gazillion times? Yeah. But
as Trump aptly put, and especially in that part of the world, ceasefire means a different thing than in other parts of the world.
Well, and generally, I mean, The Economist did a great study about ceasefires in any conflict, and then especially in the Middle East, and found that ceasefires are not really ceasefires ever. Ceasefires generally are just agreements to fight less viciously and to kind of restrain things. And in the Middle East, they tend to hold the shortest amount of time in those conflicts, according to an Economist study. So, okay, sure, but is having a ceasefire better than not having a ceasefire? Yes. And it's the same thing, one would think, with this MOU. What are they signing? Are they signing a deal that ends the conflict? No. They're signing an agreement to talk. But is it better to have one than not have one? Yes. So, okay, the markets are going to be, as we see here in very thin liquidity, a little bit happy about the fact that, well, number one, SpaceX didn't crash and burn after its IPO, which for some reason people thought was a viable possibility. I don't know why everybody was like, oh, good, they didn't crash and burn. I don't know why they should have, but for some reason...
It's also breaking the broader market. It was $75 billion that needed to be absorbed, not $1.8 trillion, like some people are losing their minds.
Yeah, I mean, for some reason, people thought that, like, the fact that SpaceX didn't implode on IPO is somehow good news. To me, that's just regular. But okay, fine. There's a little bit of hopefulness.
Is that where the bar was? The bar was like SpaceX is going to crash and burn?
I guess from reading the weekend coverage, everybody is so exuberant, like, oh, good, look, SpaceX went off and nothing exploded. I'm like, well, why was it supposed to explode? But anyway, so
it's not a future sticker.
It's weird. So SpaceX comes out, fine. There's the closest we've seen it to an MOU, fine. Does that solve the problem of inflation and of a GDP growth mix that depends on highly sensitive to interest rates and input costs investments, whereas the consumer is already being squeezed for 2, going on 3 quarters? Is that solved? Is the inflation already baked into the service sector economy solved? No, none of those things are solved. And so, okay, yes, the market gets episodically happy because, yes, an MOU is better than no MOU. A SpaceX IPO that goes smoothly is better than not. All of those things, wonderful. Have the underlying issues that caused the sell-off from the record highs
they have not
actually resolved? No,
but
none of
in
them.
the short, no, but that's, thinking about this next week ahead, right? These all things, the macro trade could be true, but in the short term, if you're getting macro risk retreating, coupled with volatility compression, SpaceX IPO went smoothly enough. It's also a short calendar. I think we should just point that out here quickly for folks because of the federal holiday on Juneteenth. This weekend's option schedule is a little bit different. The options markets will be closed on Friday, June 19th, which means the entire June options expiry cycle gets pulled forward by 1 day. Monday and Tuesday will feature your usual weekly expirations, but the action starts Tuesday with the VIX June futures reaching their last trading day, which is followed by VIX June options expiration on Wednesday. And then on Thursday, June 18th, which effectively becomes this month's triple witching event, monthly equity options, your quarterly index options, and quarterly futures contracts, they all expire on the same day, which concentrates dealer hedging activity, institutional rolling, and index-related flow into one single session here. So Thursday's close becomes the focal point of the week in many regards. If you're more of a mechanical, quantitative, let's look at the vol, forget what the noise is in the fundamentals on the balance sheets or in the news with Iran or if the Knicks won, right? You're focused on whatever the market's willing to pay you and compensate you for taking risk. Thursday becomes the focal point here. All of those usual Friday effects during a week like this, the gamma roll-offs, the pitting dynamics, the future rolls, those are all going to be coming here on Thursday, 1 day earlier this week. So just keep that in mind. You'll notice here on the platform, we've already moved forward into ESU6 as an example as the default, but ESM6, technically speaking, is still trading, Ilya, as is MES M6. But there's just a few more days left to obviously roll your positions and clear your books. Might as well get to it if you want to maintain your bias here, before we run down the clock into expiration and then a federal holiday.
Yeah. I mean, I think as you look at all of this, there is every reason to think both of these thoughts. Things appear to be occurring that are episodically risk on, and we're seeing that response in the markets, and that makes sense. That does not resolve anything about the issues that the market has been having up to this point over recent weeks. And Wednesday is ground zero for all those risks. So maybe you have a 48-hour window here. But markets being forward-looking, maybe not even that. So the one thing I would say you don't want to do here is extrapolate anything about what you're seeing here into something that lasts beyond the first sign of technical resistance to upward momentum. I think you have to be incredibly focused on the price action here. Because we know what the risk is in just 48 hours. We know how much the market cares. We know there's no earnings and no big IPOs and nothing of that sort to take its focus away. And we know that the news that we're looking at here that's supposed to be positive, it is, but it's positive in an episodic kind of way. And not
wholly
in a
contingent
resolutions kind of way.
And wholly contingent upon being verified by counterparties.
And even then, it's an agreement to talk. It's not a deal. It's an agreement to talk about one.
I want to talk about SpaceX real quick, but I want to put a bow on the Iran conversation and turn the corner because oil here, Ilya, you know, I've been going back and forth with you on this. It's felt toppy. It's looked like a head and shoulders. Friday, we got a close in the neckline area. Today, we got a 4.3% gap open lower to the downside here. You know, is this the clearest sign that the market has priced in, not just we're getting to a ceasefire, but like the oil is going to start to flow again? We're 20% off the highs at this point. It's a bear market, isn't it?
I mean, I think you have to look at this and say, at this point, you've taken out maybe some level of near-term technical support. You're coming in on what is essentially the bottom of the wartime range. What is the risk reward? Is the risk reward to sell into this support? I don't know. Doesn't look very attractive to me.
So your buy, let's say we wash out to 75 this week where we had that April 17th low. That was one of those first, we're getting to a ceasefire agreement days.
Yeah.
You get down CLQ6 here, the August expiry. So you get down to 75 or so. You look to potentially add some long deltas.
Could be. I mean, let's see what it does there, right? As ever, I think you have to be flexible with the price action. But take a look at CLZ6. It's a different story.
It is. It also feels like it isn't. I mean, I'm trying to be generous here with where I'm drawing.
I mean, we're getting the
to.
gap, but we're still at support.
Yeah, the charts just feel like they're keeling over a little bit right now. And the weekend's news obviously catering to that gap open and
it makes sense, right? It's better to have an MOU than not to have one. That makes sense.
Yeah, no, of course it does. You know, the Z6 contract is falling less than the Q6 contract. So even if there is a flush in geopolitical risk premia, it does feel like if you want to bet on the oil long side, playing the front month is going to be totally contingent upon the headlines because that's where supply is going to be the most sensitive. I would love to see a flush out. Like the April 17th low that we have here is actually not as low as some of the lows that we had in early April in the CLZ6 contract, unlike the rest of if you look across the curve in the oil futures. So if we got to move down to 70, like give me another 6-7% to the downside here. And I would be very interested in starting to go out to $60 below the pre-war lows. I'm with you on the inflation and the supply problems. It's just what time frame are we working on with here?
It's a time,
I don't want to do that
exactly.
I don't want to do that in Q6. I'd rather play that view in Z6 after a pullback and then load up at end of the year. Like, go out to 185. Yeah, 185. What can we do right now? 160.58. We can already do basically 4 to 1. Still, with this oil vol, I mean, that's a lot of time here. Theta's only 1.3, so you basically, you collect $1.30 a day over the duration of this trade to get to your $440 profit there, Ilya. Is that worth the use of capital, $531? Maybe it is for some folks. But I got to really think about this because I really have strong convictions about oil not getting back to where it was before the war during calendar year 2026, and I will absolutely trade around that view.
Yeah, I mean, even just thinking about this bigger picture for a second, let's consider. Let's take geopolitics off the table. There is a huge conversation about, oh, AI is going to replace all of this work. Okay? What does that actually mean? That means a shifting of the incidence of costs of that work. It's not like that work is free. It's just the cost of the work becomes not the cost of labor, but the cost of energy. That's really it. And who's to say, by the way, that the cost of the energy is lower than the cost of labor? Well, that depends on what the work is. And so when you look at the incredible demand for tokens, the incredible demand for compute, everything that's going on in the semiconductor hype, well, what is that? Let's say it all works. What is that a recipe for? It's a recipe for saying now all of the cost is a windfall for energy. Because the actual model makers are loss-making enterprises. They either are going to have to jack the cost on consumers or remain loss-making enterprises and borrow at higher interest rates to pay for all this energy. All of this is number one, an interest rate story, and number two, an incredibly expensive energy story.
Yeah, but the path here is race towards AGI, become the first person to top the mountain. Whoever gets to AGI first is going to crush everyone else, right?
Yeah, but all of it is energy cost.
Sure, but once you get to AGI, everyone else falls away, and then you just jack up prices. Everyone. No, but I know that. But like Ilya, once you get to AGI, why would I want to use the model that is not super intelligence when I can?
No, but that super intelligent model still needs energy to run.
Of course it does. But so they'll charge for that. They can run. Right. They can be lost into.
No, sure, but that's. I mean, now we're talking far enough away, and far into the realm of, well, we don't know which one. We don't know how much you can charge. And let's say you can charge. What is that?
Have you been looking
at the testing?
Have you been looking at the testing results for Fable, or it's just Mythos repackaged?
Well, they think it's basically Mythos repackaged.
It is with guardrails.
Well,
that's all it is.
And apparently, you can jailbreak the guardrails, which is fun.
And Mythos is researchers are
they think it's a weapon.
It's a step below AGI. They think we're like that's the one more jump and we're there next year or the year after.
But how the question isn't that. The question is, okay, how much can you charge people before the demand destruction implodes the entire thing?
I don't know. I have solar on my house.
Is that?
I keep solar on my roof for this very. Maybe I'll add another panel so I can keep using AI and pay for the energy.
Right, but that would mean that you run your compute locally, and that's, by the way, another conversation that's being had. How do you get more compute to run locally?
That's maybe something I should do too. Got a big battery, buy more compute. Ilya, I want to talk about SpaceX here because we're in the final 5 minutes. S&P 500, 75.66, 69 points higher, 0.9%. The Nasdaq's up 1.4%. The Russell's up 1.72 up into new all-time highs. Even Bitcoin is getting a bounce here. I'm keeping an eye on Ethereum, by the way, at the start of this week. Crypto's been such a dog recently, but if there's a vol crush and yields are coming off, maybe crypto gets a breather. Swing low that we had on June 3rd, swing highs that we had here on the 7th and 8th. We're testing 1720, 1725 right now. Maybe we could catch a little bit of a turn, and if this is a measured move off the bottom, then maybe up above 1900 or so. I want to bring up SpaceX because you brought up some interesting perspective there that maybe some folks were anticipating
At least that's what
crash.
the writing read like over the weekend, where people were just jubilant that this was not a nightmare.
I don't think so. I mean, listen, the market's absorbed a $75 billion deal. The company's now valued north of $2 trillion. It's not that big of a deal to absorb, which is what signal versus noise. Check the tapes over the past few weeks.
$75
talking
billion
about this
for U.S. financial markets is like couch cushion stuff.
If it was going into the S&P, it would have forced 0.1% reweighting. Anyway, so the question is if this is going to create new demand in the market, or if this is just a reallocation of buying power that would have been spent on a Tesla, on an Nvidia, on a semiconductor stock.
Okay.
SanDisk at the end of last week, for those that are keeping score at home, closed up another 5%. So much for the chip pullback there, Ilya. SanDisk is now surging up into another new all-time high. Obviously, this is now really the question here. Is capital going to leave the AI space in this regard and move over to SpaceX, which is really, truly still somewhat of an AI play?
Yeah.
When you think about it and you look at their balance sheet and how they're modeled out for where they think their addressable revenue is, and a lot of that comes from enterprise value projected into the future. So they are an AI play. Why wouldn't the AI bucket continue to chug along if this isn't a thematic differentiator or distractor? It's in the same pool as everyone else.
Right. Well, this is the whole thing. I think there is no shortage of data points that you could point to and go, well, everything's fine here. Nothing's changed. And again, if that were the problem, it wouldn't need solving. The markets were selling off with all of those things being true. So you solve those issues. Okay, well, what are you solving? There was nothing to solve. We knew that. What is it that's the issue that's causing the markets to sell off? That, I think, is the key here. What is it that got the markets down? Was it some sort of fear of AI? Was it that we didn't have a memorandum of understanding between Washington and Tehran fast enough? Stop. It's none of those things. We know that. We can see it. There was no headline that got the markets in the defensive posture that they were in through this pullback. What happened on June 3rd and, more importantly, on June 5th? Was it something AI related or Iran related? Nonsense. So what's actually occurring? And have you solved it? What's actually occurring is the risk that the economy is quietly overheating at a low growth rate because it's having to spin many times faster than it should were it a consumption-led growth economy at this point. It's overheating under the surface, as we can clearly see in the inflation numbers. And it's overheating at a time when the Fed can't do a thing about it from the growth side and has to essentially force itself not to pop it by hiking, which is really what it should do. If you look just on the inflation numbers.
That's 2021 all over again, Ilya. Where the market sees inflation going up and the Fed goes, it's transitory and we're not going to do anything. So until the cost of money rises, until the Fed comes out and says, hey, we're going to raise interest rates for real, that rally continued. NASDAQ peaks in November 21. The S&P doesn't peak until the first week of January 22, even though inflation is rising.
Although you do get initially a first sell-off. Let's not forget. It's not like it happens all in one go. Right?
Let's finish on a trade here because we have 1 minute left and we're going to go out the door. Ilya, if the NASDAQ is breaking out, you and I will not agree about this, but the inverse head and shoulders of the bottoming out here is going to bring it about to 31,800. MNQ, I like the product fit here because I already have a bunch of long deltas in stock on in semis and NVIDIA and some software. 31,750, 32,000, period. 16 days to expiration. It's a little bit of a reach, so you're getting compensated for taking that risk, but it's only about $80 to make a little over 400. I like adding that, sweetener, kicker, And on top of the short put spreads that have already been established in M&Q and keeping with what's been doing on in SMH. And by all indications, Ilya, SMH up a little bit pre-market. This looked like last week it was breaking out. So final quotes, 75.60 here, 0.8% higher on ES. NASDAQ a little bit better, 1.3%. Oil off by about 4% right now. Apparently, the U.S. and Iran have a peace deal in place. Iran's Deputy Foreign Minister, Garbadi, apologies for mispronouncing that. He says that the deal's in place. We will obviously have to follow these headlines overnight. But Ilya, FOMC on Wednesday, it's the big note. There are no big earnings reports this week. So we will be back tomorrow morning, 8:30 Eastern, 7:30 Central Time. Live programming resumes in the morning show, the new morning show with the new format. How do you like it? We've got a lot of good feedback over the past week. Thanks for supporting us through the transition. Keep coming out. We'll keep producing this great content for all you folks. So thank you for the support once again. Ilya, hope you have a good night. You know what I'm doing tonight? I'm rewatching the Knicks game from yesterday because why wouldn't I? This is going to feed my soul for years. For Ilya Spivak, I've been Chris Vecchio. Good luck trading. Knicks in 5.
It's already happened. Let it go.
Good morning, everybody, and welcome to Tasty Live.
Today's a big day. Today is a very big day, Jamal Chandler. Not only is it SpaceX IPO, but it also happens to be your 50th birthday. Woo!
It happens to be. It just happens.